Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. If you're worried about high gas prices and the impact on your pocketbook or the overall economy, I actually have some good news for you. Oil prices are likely going lower, and I will show you exactly why. What you see here is the oil futures contracts from the CME group. So this is where oil futures contracts are traded, and they have settlements every single day. So you can see where oil futures are settling. Now, I'm recording this on September 2nd, 2022. The next month contract is actually October 2022. That's what the spot price is. That's what, when you look up oil prices on a website, that's typically what they're going to pull. The price right now is $87.25. So keep that in mind. That's the spot price for oil and what you would see quoted. Now go out into the future, December 2022. What would it cost to buy a barrel of oil then? $86.13. So a little over a dollar less. Let's go out to July 2023, $80.87. December 2023, $77.65. December 2024, $71.75. So the oil market is in what we call backwardation. And that's where the future price of oil is actually lower than the price of oil today. So why would that happen? Well, the market thinks that oil producers are actually going to increase the amount of oil that they're producing, which is happening, and demand is not going to go up at the same rate. So people will cut back on travel. Maybe they'll buy a more efficient vehicle. Maybe they'll put off on buying that SUV or truck that they've been looking at and stick with a little bit more efficient vehicle. That's what investors are pricing into the oil futures market. Now, this has an impact on oil companies as well. If you're a driller, you maybe have a little bit less incentive to drill for a well that maybe won't produce oil for 6 months or a year than you would have if prices in the future were a little bit higher. But what we've seen over the last 6 months is that the market has been in backwardation, and we have actually seen oil prices decline as a result, and oil production continues to increase. Part of that is coming out of the pandemic. Companies that shut down wells are starting to turn them back on because they're relatively low cost to produce an incremental barrel of oil. But generally, oil drilling has gotten more efficient over the last decade as well. So here in the US, there is a steady increase in supply, and that's having a big impact on prices. We've also seen the spike in demand that happened as we came out of the pandemic start to wane a little bit as people start to adjust to higher oil prices. If you've filled up a vehicle with gasoline over the last few months, you know that it's very expensive. And even just those incremental changes that you might make, making one less trip in the summer, that can have a big impact on the overall demand for oil in a global market. And that's exactly what the market is pricing in. And if you look at the future prices for oil, it indicates that investors are thinking that oil prices are actually going to continue going lower, not just over the next few months, but over the next few years. This can generally be a bullish thing for the economy and for consumers' pocketbooks, but it's also something to keep in mind if you're an investor in oil and gas stocks. The profits that these companies are reporting today may not actually last very long because they're going to be selling for lower prices in the future. These are some dynamics maybe you haven't looked at before, but if you're interested in oil futures, I will link to the CME Group oil futures in the description below, and you can see what prices look like and where the market thinks oil is heading in the future.